Tax is, as defined in Investopedia, generally an involuntary fee levied on individuals or corporations that is enforced by a government entity, whether local, regional, or national, in order to finance government activities. This means that everything from income to property to goods and service are taxed. This money is used by the government for a variety of matters. The government can use the money to improve infrastructure, help the impoverished, and generally to improve the state. Tax can be broken up into three basic types.
Tax is taxes on goods and services. Taxes on goods and services is defined as all taxes levied on the production, extraction, sale, transfer, leasing, or delivery of goods, and the rendering of service, or on the use of goods to perform certain activities. They consist mainly of value added and sales taxes. This covers multi-stage cumulative taxes, general sales taxes, whether levied at manufacture or production, wholesale or retail level, value-added taxes, taxes levied on the import and export of goods, taxes in respect of the goods, and taxes on permission to use goods or perform certain activities, taxes on the extraction, processing, or production of minerals and other products. This indicator relates to government as a whole and is measured in percentage of both GDP and of total taxation.
The second type of tax is property tax. Property tax is basically a tax on physical land. Only property owners pay this tax. However, people who are renting the landowner's land can also be involuntarily paying this tax, such as when landowners use the money paid by their tenants to pay the property tax. The amount of property tax a landowner has to pay varies. However, it is usually based on the value of their land. In Manila, property tax is generally 2% of the property's market value, while in the provinces it is generally 1%. The amount taxed can vary based on the rules of city or provincial governments. But property tax is usually paid on a yearly basis or sometimes on a monthly basis as a part of mortgage payments. A farmer paying tax on his land imposed by the government is an example of property tax.
So the first basic tax is income tax. Income tax is made by the government based on financial income. Financial income generated by all entities within their jurisdiction. It is a type of tax that you can pay yearly coming from property, profession, trades, or officers, and for the self-employed individuals, and as well as the corporate taxpayers, they pay their tax from time to time. For the fourth quarter, instead of filing quarterly income tax on the fourth quarter, they file and pay their tax annual income return for the taxable year. Individual income tax is based on your graduated schedule, while when you're in a corporate, your schedule will be fixed based on fixed rate made by the tax law. The importance of income tax is that it helps our economy grow, mainly because the tax that we pay helps support our common resources such as police and firefight. Property tax, as the name suggests, is a tax on physical land. Only property owners pay this tax. However, people who are renting this property can also be involuntarily paying this tax, such as when landowners use the money paid by their tenants to pay the property tax. The amount of property tax a landowner has to pay varies. However, it is usually based on the value of their land. In Manila, property tax is generally 2% of the property's market value, while in the provinces it is generally 1%. The amount taxed can vary based on the rules of the city or provincial or the provincial. Government's property tax is usually paid on a yearly basis or sometimes on a monthly basis as a part of mortgage payments. A farmer paying tax on his land imposed by the government is an example of property tax.